So 10 top biggest mistakes that new businesses make and how to avoid them. And to be honest, this isn't just new businesses. Businesses make these mistakes, especially if you're starting out without an accountant. And so the first thing is entity structure. That's the beginning. How are you structured and why is that important? I'm going to talk about two reasons that it's important. There's many more, but I had to condense this because we have 10 things to talk about. So first of all, tax deadlines. Penalties related to not filing taxes on time are significant. If you have a partnership, S Corp, C Corp, the penalties are per shareholder or partner per month that it's late. So the first thing you want to know is, okay, what is my entity structure and when do I have to file my taxes? So I went through here and just put in, what are these dates, these main dates for us? One thing people don't understand is, if I am a Schedule C, what falls under Schedule C? That is a sole proprietor, but it's also a single member LLC. So if you are a single member LLC, you will be filing a Schedule C on your personal tax return. So it's a schedule on your return, right? So that's proprietor and that's single member LLC. And we also have extension dates. So you want to get the extension in if you're not going to get it done on time. So this is a biggest mistake because penalties and interest can get crazy, right? If you don't know, when am I even supposed to be filing? What am I? And this is the other thing. People don't understand partnership. If you are LLC with more than one member, you are automatically a partnership. You automatically have to file a Form 1065 partnership return. When we start talking about these other business returns outside of Schedule C, they have different deadlines and you have to get a K1. C Corp, you don't get the K1 or nonprofits, but you get a K1 and you can't do your personal return until you get that K1. Or if you do it not knowing you need to do it, you have to amend your personal return. And then these dates are designed to help you because, for instance, partnership, March 15th, September 15th. Well, that's a month before my personal return or personal extension is due. So that gives you time to get that business return done in order to get that K1 in order to properly prepare your tax return. So that's starting out knowing what is my entity structure. You wouldn't believe how many people don't even know what the entity structure is. Or did I choose the right entity structure for me? So a lot of times, a lot of my clients are S Corps, but they graduated to S Corps. A lot of them did not start out as an S Corp. I started out as a sole proprietor. I started out as a DBA. Then I went to sole proprietor, right? Then I went to a single member LLC. Then I went to S Corp. It's a process. And depending on how much money you're bringing in, what your revenue looks like, what your expenses look like, what does it make sense for me to do? But knowing that if I have a partner, I'm automatically going to be a partnership. So what does that mean? It can't be that that person is doing their expenses and income over there and you're doing yours. No, it's combined. So that's important. I always talk to my clients about partnership being marriage. You are literally bind to this person. And so it's very important to know all of the aspects and to have an operating agreement in place. Also with the entity structure, one of the things, and Donna Nicole talked about it, is can I put myself on payroll? Because I need to know what entity I am will determine if I can or not. So if I'm a DBA or a sole proprietorship, no, I cannot. I cannot formally put myself on payroll. Can you pay yourself? You can take your profits early. That's just transferring the money to your personal bank account. You will pay taxes on it, ordinary and self-employment taxes on it. And that's where estimated taxes come into play, and we'll talk about that. Partnership. Can I put myself on payroll? No, unless you have the S Corp election, and we'll hit on that a little bit. I have a great video that I will give the link to Dawn so that you guys can look at that video that explains this whole S Corp, right? LLC, can I put myself on payroll? No, unless you have this S Corp election, right? So you're like, what is this? What is this S Corp? The S Corp is an election. So I'm still a LLC with North Carolina Secretary of State or whatever state you're in. But I've made an election with the IRS and to North Carolina to say, view me as a corporation. Now I get to put myself on payroll. And a lot of times people get nervous about payroll because they think I have to pay myself a certain amount or a certain date. If you have ever been in corporate America, you are used to on the 1st and the 15th or every other week, you get this amount, you get this set amount. It's different in business. We have the ability to pay ourselves when we need to. Some people pay themselves every week. Some people pay themselves once a month. Some people pay themselves when they have the revenue to pay themselves. And so it just really depends on what it looks like for you. C Corp, yes, you have to put yourself on payroll on a C Corp. Nonprofit, yes, you can put yourself on payroll. Why? Because a nonprofit is a corporation. So it's understanding the type of entity and what can I do with this entity. Most of my clients are on the S Corp because there are a lot of advantages and they pay themselves. So one thing I truly believe is you have to pay yourself. So first starting out, you might not be able to. But when you are working hard in your business and it is how you make revenue and pay yourself and pay your personal bills, you have to pay yourself. I'm a stickler with my clients and I say, there's not enough. I just won't pay myself. That is not what we're going to do. That is not what we're going to do. And then I have this other rule. I have to make the most in my company. I work the hardest. I put in the most hours. I have to make the most. It is not a charity. I am not in it for other people to get paid and I not get paid. I have bills to pay. I have a life. So you have to really learn how to treat your business like a business. And that separation really starts helping you with that. It is a process. I remember going through the different steps and now it's time to pay myself. And I'm like, taxes. I don't want to pay the taxes. Well, you're paying the taxes anyway. So you just have to figure out what works for me, what's the best entity structure. And this is the beginning. When you start your business, it's the entity structure. It's figuring that out from the beginning. We'll go to number 2, failing to keep accurate records. So that could tie in with number 1 when we talked about tax deadlines, right? A lot of the reasons why people don't make the tax deadline is because they don't have accurate records. They don't have complete records. They did not keep records during the year. And now it is time to file taxes and they have nothing. And they're trying to scramble together and put things together and have some kind of something to give the accountant, right? This is dangerous for many reasons, not just taxes. How do you know what's going on in your business if you don't see the numbers? So high level, this is what happens. High level, you're like, I'm paying my bills. Money's coming in, expenses are going out. I'm able to pay my bills. I'm good. You can't plan like that. You can't have a strategy like that. I need to know every month, what are you bringing in? What's going out? And actually looking to see, well, what expenses made sense and what didn't make sense. But if you don't have record of it, you're just guessing. You are just guessing. So it's really important. And a lot of times starting out, you cannot afford accounting services. It's a part of this. So what you do is you have a consultation with an accountant, say, what software should I use? How should I do this? What we offer to clients that can't yet afford bookkeeping is let's have quarterly reviews. Let's have reviews twice a year to just look at what's going on. Are there things that you can be doing during the year? You're going to have to keep records the best way that you can, and using software is very important, right? So impact, poor record keeping can lead to missed deductions, inaccurate tax returns, and potential penalties. Solution, implement an accounting system. Use software. We all start out with a Google Sheet or Excel. We don't have to do that anymore because we have software that is going to help us. Software that's going to pull it from the bank, pull it into the software, and we reconcile it. You all have heard about QuickBooks. QuickBooks is not my favorite, but it is the most popular, right? I like Xero, Xero. I like Xero because it is user-friendly to non-accountants. So I have some clients that do their own bookkeeping, right? And they have to use a system that makes sense to them. So I went to school for accounting. I know debits and credits. I know about balancing. I know all of that. But someone else that's in some other industry is clueless and is like, I don't even know what I'm doing. So you have to find a software that will help you so that you're just not like trying to figure out a whole nother profession while you're doing what you're doing. You have to update regularly. So this is something else we do differently. We reconcile every single week for our clients, every single week. Pick a day, your slowest day of the week, and say, I'm going to commit 1 hour to reconciling my transactions and dealing with my accounting. Because if you don't do that and you wait, then we have thousands of transactions just first dealing with the 50 that I have for this week or the 25 that I have for this week, right? And then it also helps you. So we'll have a client that went and withdrew $100. So if I come in 30 days and say, what did you withdraw that $100 for? You are going to say, I don't know. Because you're not going to know. You're not going to remember. I honestly don't remember things that happened 48 hours ago, 24 hours ago, right? So I'm not going to remember 30 days ago. First of all, I'm going to tell you, stop that withdrawing. You don't, what are you withdrawing for, right? But if I ask you within a 7-day period, what was that for? You're going to remember. It's more likely that you're going to remember what that was. Oh, that was such a. So every single week we send out an uncoded report that says, hey, these transactions, what are they? And then the client fills it out and then we have it. And we don't have to wait for this 30-day. We don't have to wait. Now, let's say someone comes to us and they say, I need back work done for the whole year. And this happens all the time. They have to really start remembering what the heck happened throughout the whole year. So now you're getting an uncoded report that has like 300 transactions on it. You're overwhelmed. You don't know. And so half the time it's a lot of guessing going on, right? And IRS doesn't like guessing. So getting something in place and knowing you have to work with someone that you have a good rapport with and that understands that starting out, you might not be able to get the top service. You might have to start small. 3, misclassifying workers, right? A lot of times people don't understand that it's not your choice to pick whether someone is an independent contractor or an employee. This really is governed by the Department of Labor and how that person is used in your business. So you might have someone that, okay, let's say you hire an admin. You're telling this person when to come in, what to do, these are your tasks. All of that would say that's an employee. But if I contract with someone who has an administrative business, right? They have a business of doing it. They just have a contract with me. So it's the same type of work, but what they do for me and how they do it for me is different. So you don't get to pick that. It really depends on how they're working for you. And if the IRS deems or Department of Labor deems this really should have been an employee, now we have a situation where we have to pay back taxes because we didn't do payroll, right? So figuring that out from the beginning. Number 4, neglecting to pay estimated taxes. So someone asked this question, I think it was Sarah, right? So businesses that don't pay estimated taxes may face penalties, interest charges, and in addition, now we have this huge amount that we have to pay at the end of the year, right? Estimated taxes. So the people who have to definitely pay estimated tax payments would be the sole proprietor and the single member LLC that is not set up as an S corp, because now we don't have payroll. So understand that when you worked in corporate America, you were paying estimated tax payments. That withholding is estimated tax payments. You have no clue what you're going to owe at the end of the year. Money is coming out every check and being sent to the IRS and your state if you have state taxes. That's an estimated tax payment. Many people don't understand that. So you're already doing that. You're already used to doing that, right? Now what the IRS says is, well, since we aren't collecting from you every other week or every 2 weeks, we need a way to get this money so that at the end of the year, you're not owing us $20,000 and can't pay it. So what you need to do is every quarter, look at what your net income is and send in a portion of that in as an estimated tax payment. Same as
Mary,
withholding. Yes.
we have a question around this. I was trying to
Okay.
wait like every maybe
No worries. I'm
questions.
okay with this.
Okay, yeah, this is really good. And well, even for the YouTube recording, we're trying to let the
Okay, no
content come
worries.
through. But great questions. The women are very responsive. And so one of the questions that came through that I think is relevant is Sarah says, accounting, she says, I've been putting money away in a high yield savings account, holding that money to pay the taxes, but I want to make sure that I'm working the way I'm supposed to be. So what do you recommend for someone like Sarah? Is that okay to put that in the savings account and then pay it all at the end of the year? Or it sounds like you're saying go ahead and pay it quarterly. What's your advice?
Okay. So
Yeah.
one, Sarah, what kind of entity are you?
Sarah?
I'm an LLC.
Single member LLC?
Yes.
Okay. So I love that you're putting in a high yield savings account, right? And it is smart that you're growing some money on this money instead of giving it to the IRS.
Yep.
The only thing is you can get a slight penalty for not paying it in during the year. There is a penalty for underpayment of the taxes, right?
Got it.
It is a small amount to appear to, if you are making, depending on how much you have saved, if you're making hundreds of dollars on that money, it may make sense to go ahead and take the hit that may be like $100 on a penalty for underpaying your estimated tax payments. So you have to do what works best for you. I'm going to make the money on it, and I'm not going to give it to them for them to have it, for them to put into account and make the money on it. So you just have to weigh that out. Here's what goes wrong, Sarah. Some
Okay.
people are not like you and they cannot save.
Right.
And in those cases, I'm like, send it to them. Because
Yeah.
if you can't save it, you're going to pull it back to use it in operating, you're going to go spend it, then send it in.
Yeah.
Your way is a good way of doing it if you have discipline. Knowing I might have a slight penalty because I didn't pay it during the year. It's not a dramatic one. The dramatic ones are late filing, and interest on not paying, late payment, right? So your
Perfect.
way of doing it works. What you need to think about is, am I at the point where I can put myself on payroll and I should be an S corporation? When
Right.
you are an S corporation, we have more wiggle room with estimated tax payments. Most of my clients that are S corps do not do estimated tax payments. Why? We're looking at that net income every single month because S corp is what we call flow through entity. We're controlling that number. So what I'm going to say is, before you make an estimated tax payment, I'll say pay yourself more, because now you're paying in that estimated taxes through your withholding, right? So we control a lot in that S corp world, and 99% of my clients that are S corps do not make estimated tax payments.
Super helpful. Thank you.
Welcome. So yes, so another point, see, this is kind of feeding on each other. Calculate and pay quarterly estimated taxes to avoid that underpayment penalty. How do I know what I need to pay if I don't have any data to analyze? So if I haven't been doing my bookkeeping, then I don't know what my net income is going to be, my estimated net income is going to be. So some people send in nothing. Some people just send in anything. And some people say, okay, I know that I'm in the 22% tax bracket for personal, and I know that I do have some deductions. So let's just say I'm going to put away 15 to 20%, and then maybe 5% for the state, depending on where you live. So every time you get a contract paid in or something, you might say 25% of that is going into that high yield savings account. I'm putting it away right away because I know it's not all mine. And the great thing is, if you paid in too much, or if you saved more than needed, if you paid in too much, you're going to get a refund. If you save more than needed, you have money in savings. So it doesn't hurt you to actually do this. It helps you, because who really literally has all that money just sitting there unless they strategically save like Sarah?
Yeah. I think also the other thing is, are you putting away enough, like based on your 15 to 25%, right? Because that's hard to know.
Right. So it's also knowing how to read your actual personal tax return. What tax bracket am I in, right? Because the only one that is not reliant upon my personal is a C corp or the nonprofit, right? So I need to know personally what bracket am I in. And if I'm married, now my husband or wife comes into play. I need to think about their income as well. So it's a whole picture of it. And that's why you have to have strategy. If you have a business, and honestly, even if you don't, you need an accountant, you need a relationship with an accountant so you can have the questions and strategize. You
So
have to be able to strategize. Go ahead.
one more question. Well, this is creating a ton of questions. So,
Okay.
Mary, I'll ask just two more and then we'll let you get on through a few
Okay.
more before we ask questions. Okay. So, Edna says, hey, I'm an LLC business. If we haven't paid the quarterly yet this year, can I still pay the past quarterly? Is it too late?
Okay, no, so it's not too late. It's too late to do first or second quarter, but you can catch up in third and fourth. And so you can still pay it in. You're in full control. You can pay in whatever amount you want at whatever time you want. It's just broken up into quarters. So you can't really go back and say, well, this is Q1. Well, Q1 already passed. So they're going to apply it towards Q3.
Okay. And last question. That's really helpful. They're loving this, by the way.
Right.
Last question here is, hey, what if you are waiting on a contract and you file 0 for quarter due to no income? Would
That's
that
totally fine because in that quarter, there was no income. So that is totally fine. So when that contract comes in, that's when you're going to send it in. So if you didn't, if there's no need to pay in for a quarter, you don't have to.
perfect?
You're totally in control of this and you're looking at your numbers to say, do I need to? And let's just say you were in a first quarter, you had a loss. There's nothing to send in because there's no income. It's a loss.
Good to know. Awesome. Thank you.
Okay, no problem. Number 5, overlooking available deductions and credits. We want to make sure that we are deducting every single thing that we possibly can. It is industry and business specific. And that's why I bolded the word applicable, because what may be deductible for one business may not necessarily be deductible for another, right? If I don't really have travel, then I don't need to be deducting travel. So it really depends on what it is. Now we have a lot of content creation, right? People are going on trips to take content. So sometimes there's special cases where it's okay, how can we make this into a situation where it's a business expense, right? Automobiles get caught up in this a lot because people will say, well, I use it for business. Well, you use it for personal also. People will say, well, I had to buy these suits for business, but do you go to church? Do you go to a funeral? Do you go to, if you are wearing it somewhere else, it's not just a business expense. MND Accounting, right? This shirt, of course, I'm going to deduct this because this is a business expense. And honestly, if you see me outside of this house, for the most part, I'm going to have on something that says MND Accounting. Because why? Advertising. Advertising. So if I don't have this one, I usually have another client's shirt on. They always give me shirts, right? So I am going to, and especially now since COVID, I can't tell you the last time that I really bought a dress or a suit for work. It's always going to be branded items, so fitting your life to really make this make sense. But the deductions are important and you don't know what you can deduct if you don't know. Retirement is a huge, people think that because I am self-employed, because I have my own business, I can't have things that other people have. I can't have retirement. I can't have short-term or long-term disability. I can't have healthcare. All myths. I have excellent healthcare, right? All myths. You can have all these things. And guess what? Most of them, because I have a business, are deductible. Whereas if I was W-2, I couldn't write off a shirt. There's so much I can't write off being a W-2 employee, right? But because I own the business, there is a lot I get to deduct. I pay myself a car allowance through the business. The business does a lot of things for me personally, but my mortgage, my car insurance, things that are not related to the business that are in my own personal world, then I take care of. But my company pays in retirement for me. I pay in retirement for myself. Like all these different things that you can do through your business and get a deduction. So don't think you can't. It's all about graduating. Like I'm at the point now where, yes, I can contribute to retirement for my employees. Yes, now we're looking into HSA and other employee benefits, but this takes time. When I started out, it was just me. I did everything. I answered the phone. I did everything. It was just me. But one thing I always did, I always had an org chart. I always wrote out what positions I needed. And everybody but me when it first started had TBD under it. I still to this day have an org chart in my office at the office. Today I'm at my home office. I have an org chart. I used to just write it out in notebooks because I knew what I needed. And Oprah always said, like, treat your business like where you see it. So I was like, okay, I know the first thing I need is an admin. I know that when I first started out, all I had was the tax side of the business. Tax was the only service that I did when I first started. That's the other thing. You do have to focus, right? I knew that, wait, I'm doing all these tax returns, all these businesses, they need bookkeeping. But at the time, it was just me. I'm like, I can't take that on. So it's really important. You're going to get other nuggets that have nothing to do with taxes. It is really important for you to map things out and plan things and not try to do everything at one time. Even when my clients get on payroll, I didn't tell them, okay, they're going to start calling you about retirement. We're not there yet. You just got on payroll. Let's get used to this. Let's get comfortable with this before we start doing something else. So deductions are important. And guess what? What the salary I paid for myself, officer's salary, 100% deductible. The wages I pay to my employees, 100% deductible. So over in that Schedule C world where you have the income, expenses, net income, you really use that net income as your pay. Guess what? It's not deductible. Ordinary taxes, self-employment taxes. It's not deductible. But in my world, that same number is deductible. So how you structure your business is really important. And that kind of plays out through all of this. Let's go to 6. Oh, that's a big one. Mixing business and personal expenses. Blurring the lines can not only complicate tax filings, lead to disallowed deductions, but now we have a situation where I don't know if any of you have ever heard of piercing the corporate veil. A LLC is just liability protection. It's not a corporation. We use the LLC to protect ourselves. I have things personally that I don't want a client coming trying to sue me to get, right? So that means I have this LLC that's protecting me. So you can sue my business, but you're only going to get what's in that business. You can't come get my personal assets, right? However, if I start doing things that's reflective of my personal is mixed in with the business, now we have a situation. I've pierced the corporate veil where I might not have that protection anymore. And if I lose that protection, now they can come after my personal stuff. So it's really important to understand that and to try to keep things as clean as possible. Get that business bank account and use it. All the income comes in there, all the expenses go out. And if you are still a sole proprietor or a single member LLC, you just do a transfer. I still have to take care of my personal life, transfer that. That's you taking your profit early and then handle all your personal stuff in your personal account, not in your business account. You have to keep it clean. A lot of times people will say, I don't have business credit yet. I can't get a business credit card. Okay, then I instruct them this way. I want you to get one of your personal cards and you're only going to do business things on that personal card. That way it's clean. We don't have to say, wait, this was personal, this was business, this was personal. It's all business. It just happens to be in your personal name. And at least that way we can justify, hey, IRS, look, all these transactions, they're for my business. I just had to use my personal card. That's still valid because you can track it. You have valid business expenses. But when you start using this one and this one and this one of this personal one, and then you have to start, oh, this was business. Oh, that's too much. You're making it harder on yourself. Use that one personal card for business only until you can get business credit. Not planning for tax obligations. So back to what Sarah's talking about. Why she's putting money in that high yield savings account is because she knows at the end of the year, she is going to owe. She does not want to have a $10,000 tax liability and have to figure out where am I getting this money from, right? Now, no one wants to pay taxes. No one wants to pay taxes. No one wants to pay taxes. I don't want to pay taxes. It's a part of life. The way I look at it now is if I am paying taxes, one, I'm going to pay the least amount because I'm going to make sure I got all my deductions, but it means I'm making money. One of my favorite books, excuse the language, is called Get Rich Lucky Bitch. It talks about focusing on the income. I am not that concerned with my expenses, believe it or not. Why? I know I am making the money. I know I'm making the money, so I know I can cover these expenses, right? I only look at my bank accounts now to make sure I didn't get got, right? To make sure somebody didn't double charge me for something. I have some fraud in there. I am not looking at accounts to see if I have money. I grew up poor, right? I had to climb out of that. There are times where I had to look at the account in the grocery store to see, do I have enough money to buy this, right? Mindset change, elevation because of education, right? Because of a business. Now I know I'm only looking to make sure there's no fraudulent activity or things happening that shouldn't be happening. I'm not looking to see if I have money. I know I am working. I have income. I know that I can take care of the expenses. And one of those expenses is taxes. But I'm so focused on making money that that's where the focus is, because whatever you think about all the time is what grows. I'm not interested in more expenses. I am interested in growing the income.
Mary
So,
Nicole,
yes.
this is really good. I think this is a great place for a question. And then I know
Okay.
you're going to scoot on to 8, 9, and 10.
Yep.
So first of all, thank you for your transparency. I think a lot of people can relate with you, so we appreciate that.
Mhm.
Angela Doyle says, hey, can you please talk about LLC versus taxed as an S corp?
Yes.
Okay.
Yep. So, LLC, what we mentioned is still filing on a Schedule C, right? LLC is just for protection, liability protection. It does not give us a status as a corporation. So you cannot put yourself on payroll. The only way you can pay yourself in an LLC is just transfer the money or write out a check to your personal self. You're just taking your profit early. The S Corp is an election. You're asking to be viewed as a corporation. That is when you can put yourself as the owner, as the shareholder on payroll. So the only real difference is now I'm viewed as a corporation and I can put myself on payroll. So the reason why the majority of my clients are S Corps is because of that feature. I want you to pay yourself. I want you to pay yourself and it be deductible. I have a great video that explains the S Corp election that I will give to Dawn Nicole so she can send out to the group.
Perfect.
Hopefully that helps you.
Yes, that's great. Thank you.
Failing to comply with payroll tax requirements. So once you have employees or you are an employee, you then have to do payroll tax returns. So since I am not in the business of going to jail, I don't want to go to jail, right? I don't want to mess with everybody else's money. So my employees, I'm in charge of their money, like they earn this money. I have to send their withholding off to the IRS and to their state, right? And Social Security. I actually use ADP. I don't do payroll services. I don't want to be responsible, right? It's called like a trust account because that isn't my money. That is my employees' money. And so if I am not making sure that the payroll taxes are paid, this is a whole different level of responsibility. You know how you can kind of get offering compromises when you owe taxes personally? On these trust accounts, they are not so generous because it is not your money. So I like to, and I don't like the middleman. So a lot of banks will say, we offer payroll. The bank is not a payroll service company. So what are they doing? They're contracting out with ADP, with Paychecks, with Gusto. And now they become the middle person. I don't need the middle person. Give me ADP. Why? Because you are the payroll company. The other great thing is they are liable. So if a state sends me something or IRS and said, we didn't get that payroll tax return, I just send that notice to the ADP and say, hey, they didn't get it. You guys better figure that out, right? Because I pay you to handle that for me. And you are now responsible to handle that for me. And there are situations just where paperwork gets lost. I don't know. And you do get the notice. I give it to ADP. ADP says, oh, we filed that. We'll take care of it. Okay, great. You handle that. So you want to make sure that you are using a payroll service. Do these things, do these services cost money? Yes, they do. To be in business, you have to pay for things unless you're going to be doing it. I am not interested in doing payroll tax returns. I am not interested in submit. I'm going to pay ADP to handle that for me. Right. And so outsourcing to a payroll service provider, that for me is ADP, could be I have clients that use all different kinds of payroll service providers. I just like having some that is payroll. So for instance, with ADP, I run my payroll on Thursday. My employees are paid on a Friday. There are certain companies, I think Gusto is one of them. In order for them to get paid on a Friday, I have to run it on Tuesday. What's the difference? ADP basically fronts the money for me, because what happens is I run it on Thursday. On Friday, like midnight, it's in my employee's account. They haven't taken the money from me yet. So it's important that I have the money sitting there because they fronted it for me. Company like Gusto, not as big as ADP, they're not doing that. So guess what? You're going to run it on Tuesday. By Friday, we have the money from you. Good. Your employees can get paid. So you just have to know the different type of companies and how you need it to flow. Number 9, incorrectly reporting income. This happens a lot when people, one, are not accurately doing their bookkeeping, right? So you have all these different merchants, right? Merchants give out statements, 1099-Ks, and depending on your transaction number and the amount, you might not get a K. You still have to report. Let's say you didn't get a 1099 from somebody. You still have to report that income. And you have to properly, if you're doing your bookkeeping properly, every dollar that comes through that bank account, you're going to have record of it. When you become an S Corp or a C Corp, you do not have to get like the 1099 NECs. You don't have to get them. Some companies still send them, but you don't have to get them because they're saying you already are doing your bookkeeping. You're tracking every single dollar. But if you're not doing it, that's when things can get messed up. And you can say, okay, IRS, my income was $100,000. And the IRS is saying, no, your income is 150 because we see here from these K1s, these 1099-Ks, that you have more income than you reported on your return. So that starts a whole problem. So it's very important that you report the correct amount of income. Some people are on a cash basis. Some people are on an accrual basis, meaning when I get the money, I record it. When I get the contract and it's signed, then I record it. So it really depends on how your business is set up. 10, and this is the best one. I have to say the best one for last. Not consulting a tax professional. Now, I will tell a client, if they listen, someone will come to me and they have a W-2 and I said, you really could do this. You really can do your own tax return. You should do it. But it starts getting complicated when you get a business. There are things you don't know. And you might say, I could just do this as data entry. Okay. There are tax laws, there are rules, there are deductions. And guess what? Sometimes it's just a consultation. Sometimes it's, I think I have this. I think I really can do it, right? But then a lot of times it's, do you even know what a K1 is? Do you know how to enter that into your personal return? Do you know how to get that from the business return? So there's so many things that you need to learn and know to actually do this business return. It is not as simple as that 1040. And so you need a trusted tax professional to help you with that. You need that relationship during the year. So when all the crazy COVID happened and people wanted to get the PPP loans, I only serviced people that were my clients already. Couple of reasons. One, I already have the relationship with them. They're first because I already have the relationship with them, right? 2, I know their information because to get these the loans or the grants, you had to provide financials, tax returns, all these things. Well, my clients already had them. They already had everything they needed. No problem. To have someone new come to me, one, a lot of people were making up information. I'm not putting anything I have on the line for that. I don't know you. We're not in relationship. No. 2, a lot of them had no financials and needed back work done for the whole year. I don't have time for that. We are in tax season dealing with a pandemic. I got to deal with the clients that I already have. And so when you don't have that relationship, you're kind of at the bottom. I'll get to you if I can get to you, or it's I'm not getting to you because I don't feel comfortable because I don't know you, your numbers. If you're doing things legitimately, I'm not willing to risk anything. And so you have to have that relationship with an accountant, even if it's just having some meetings a couple of times a year to, am I doing this right? Does this make sense? And then just having it to where I know I can get to where I can ask this question I can, I have a team, so it is not just me, right? And so my team makes sure if they can't answer something, it gets to me and I answer it. But it's that relationship. Relationship is key in all aspects of business. So, questions.
Yes, wonderful. First of all, thank you for your time and just thank you for your expertise, Mary Nicole. There were several times that people said, "Oh my gosh, I always wondered this." I think like the Gusto piece there, when you said here's the difference between ADP or excuse me, QuickBooks and Gusto.
ADP,
So
you were right.
yeah, thank you for that. Yes, ADP, sorry. So yeah, a couple of questions have come up. And I'm just trying to make sure. So one, there was a point that if you could speak on, I think
Mhm.
Angel, you mentioned it, and I don't know if it's a question, but it's probably worth mentioning. So it says if you are in real estate, you will want to incorporate in Nevada. They have the highest standard for protecting business owners, and the standard for piercing the corporate veil is higher than almost any other state. Can you elaborate on that, Angel and or Mary Nicole Douglas? Because I know you hear all these myths or all these things all the time. I don't want to call it a myth, but yeah.
So the only thing you have to be careful with incorporating other states is realizing you're going to have to do a foreign entity in the state that you're actually in, and you're still going to have to do a state tax return for the state that you live in. So incorporating somewhere and paying taxes somewhere is two different things. So yes, to our point, there are some states that protect the business more. But there are also situations where, from a tax perspective, it doesn't necessarily save you with taxes because you live in North Carolina and have to pay North Carolina state taxes. So it is two competing priorities, I would say, with incorporation protection, with the piercing the corporate veil, and the liability protection, and then taxes.
Awesome. That's good. That's good. There were some other questions. So I just want to make sure I'm going to go to the earlier things. We had women put in the chat things that keep them up at night and challenges. And I just want to make sure that we hit on everything. Sarah says I've been putting money away. We talked about that. Okay, no, I think we're good. One question I had for you that was new information for me personally is understanding how to classify the people working with you, right? Like for me, we're a very big contract heavy. We pay people as independent contractors in most cases because we haven't made a decision to hire actual internal employees yet. But what is the right conversation to have up front in order to determine and make sure you're classifying people properly? Do you
Yep.
have any guidance? Yeah.
So we talked about that a little bit on one of the numbers, and it isn't about I'm not ready to have an employee yet. It's about what role are they playing. So in your situation, a lot of these people have their own businesses. They're just having a contract with you to do a service for you. That is different than having an employee. So the first thing you're looking at, and you can go to the Department of Labor and look up classification, right? And they'll give you a whole checklist on, does this happen? Does this not happen? Does this happen? Does this not happen? I have one client in particular who a lot of their people are contractors, except for the admins, right? And so I've had to go to bat a couple of times with workers' comp because they're like, no, that's an employee. No, it's not. So we have to go through that whole thing. So you can get a checklist on the Department of Labor to determine, is this an actual employee? Now, if somebody's coming in, if the thing is, I just don't want to pay them as an employee, that's not going to be enough. It is related to what they're doing for your business and can they really be classified as an independent contractor.
Thank you. I was on mute. That's really helpful. One final question, and then by all means, if ladies, we can take one more outside of me, and then we'll wrap up. Recently, I had a corporate partner, and maybe you'll understand because you're right here in the Carolinas too. I
Mhm.
had a corporate partner in North Carolina. We're actually headquartered in South Carolina.
Okay.
And she said, hey, you may want to register your business with the Secretary of State in North Carolina since you have so much business in North Carolina. And I
Yep.
thought, okay, can you talk about that a little bit, please?
That's
Yeah.
just what I was talking about with the foreign entity.
Okay.
So established in Nevada was the example.
Yeah.
And we'll say established in South Carolina.
Yeah.
You would get a foreign entity in North
Mhm.
Carolina, and in the foreign entity is just some language they use. All it is you're getting an LLC in North Carolina, same exact name. You do not get a different EIN number. It's just saying I have this business in North Carolina as well. So
Yeah.
do I work for it? Like you might want to go get a contract and you have to be North Carolina. Well, guess what? I have a North Carolina LLC. It's called foreign because my first one is in South Carolina.
Ah,
And then I have a foreign one in North Carolina.
and that's something I can do directly through the Secretary of
North
State.
Carolina Secretary of State. Yep.
Yeah.
You will pick foreign entity.
Awesome.
So your main one, South Carolina, you same exact EIN. It's just a foreign entity in another state that you service clients.
Perfect. Perfect. I see Crystal has her hand raised, and then after Crystal, we have time for one more before we do our wrap up.
Okay.
Crystal?
Hey, Mary Nicole, excellent job today.
Thank you.
Just one comment about the foreign entity. I'm based here in South Carolina, and when I registered with the Secretary of State for North Carolina and Georgia, and I selected foreign entity, I had to have a registered agent since I did not reside there. Are you aware of that? Or
Yep. So
these-
register agent. So all you have to do is have an address. So you can go to I'm not going to say PO box, but do you know the places that have the actual addresses? Because you just have to have a Georgia address. So you can pay very minimal to get a Georgia address and be your own registered agent. So register agent is we just need a name and address of whoever's going to get your documentation in that state. So you can go get a location, I don't know, not mailbox, etc., but the type of places where you can get a virtual address and use that virtual address and be your own registered agent. If you don't, then you will have to pay someone just to use their address as your registered agent.
Perfect. Does that answer your question, Crystal?
Yes, thank you.
Awesome. I also just put Mary Nicole's information in the chat. So definitely be sure to reach out to her with additional questions. We do have to do a quick wrap up. Mary Nicole, did you have one more slide that you
I
needed?
just want to say working on your business and not in your business will give you the opportunity to see what changes need to take place. So the fact that you're here today, we always have so much to do in our business, but you have to work on your business, and accounting is a part of it. So just make sure that you are doing it. This quick mind your business. So our eyes play tricks on us is really MND, but your eyes will think mind. You have to mind your business, and MND can help you with that. And here is our information, and Dawn Nicole also put it in the chat. I enjoyed talking with you ladies. I love these opportunities to share this information, and thanks for having me.
Yeah.